All right, good morning, everyone. Once again, great to have you with us along this journey of exploration into the trading world. It is Thursday, June 25th, 2026, and this is the audio addition to the Daily Trade Strategy Briefing. To satisfy the regulators, we need to show you the disclaimers telling you that past performance is not indicative of future results, and that's found under Compliance Rule 2-29C subparagraph 1. If you wish to read the entire disclaimer, contemplate it, agree to it or disagree, but the regulators has me showing the disclaimers. All right, once that's out of the way. Okay, today is a cycle day 3. Let's go over to the cycle charts for a sec. All right, NQ's on the left, ES is on the right. As you can see, pretty much yesterday's, after the close yesterday in the NAS, okay, that big move was the Micron's earnings. Okay, so that was a big event. You know, this Micron is getting more attention than the Nvidia as of late. So again, there's a lot of people now, been really focusing on the semi area within the technology section. The semis have been in fuego, and so that's what drove up yesterday after the close there on the NQ. Of course, ES kind of went along with that a little bit as well, all right, but not as dramatically as the NQ because the broader based index versus that. But again, I believe right now the technology sector ETF, I think it accounts for 28%. Oh, no, I'm sorry. Is it 28%? 28 or 30%? 38. One of those. It's big. I think it's 28%. I could be wrong. John B, can you help me out with that? I know you're tracking it as well. But nonetheless, it's a big factor of the S&P. So again, as the saying goes, yes, 38%. Okay, mid 30s. Okay, great, thanks. Appreciate that. But as the saying goes, so goes Nasdaq, so goes the market, right? So we've got to pay close attention to that. All right. Again, we're also getting into the end of the month, end of the quarter. So there's obviously, again, just fundamentally, there's always a big rebalance at the end of the quarter. Now, sometimes that rebalance is, bullish. Sometimes it's not. Sometimes it's just paired off. Okay. I don't know what influence it's really going to have. Yeah, the window dressing. I don't know what influence it's really going to have, this time around. But we're getting into that period, right? The last 5 days or so of the year. I'm sorry, of the quarter. All right. So just something to keep in mind. The backdrop, you know, uh, like I said, it's more informational than actionable for us. I don't have an end of the quarter play in any way, but it is, obviously, important to, have that, keep that in mind, understand what's going on there, and yeah. So okay, so over the past 5 days or so, we've seen what happened, but most recently here, this is kind of where our focus is, right? Not way up here, at the 7600s, we see where price has come from. More importantly, where has price most recently been? And again, this past few days, all right, after that break, that liquidation break, lower, the market has been consolidating, and that's generally and typically what we expect after a certain, a break. Now again, we'll get these liquidation breaks, right? The market gets extended, market kind of chugs and chugs, right? Not getting any, further movement to the upside, right? And, you know, really all it takes, some people have asked me, we talked about in the past, like, do they all coordinate at the same time? Do they all coordinate at the same, like, do they go into this conspiratorial meeting and say, okay, we're going to slam it today, or we're going to jam it today, or whatever? And, I think the simple answer, is, uh, no, you know, um, the idea there that everybody is conspiratoring, conspiracy is no. But here's the thing: a lot of these, ETFs, right? Particularly the ETFs, right? And again, they're all algorithmic driven. They're all percentage of volume. There's all varying degrees of it, but again, they're all kind of in this automated fashion, right? The way they're created. And if you think there's a portfolio manager sitting there, making all the decisions, it's not. They're machine. It's all machine based, right? But what happens is if somebody out there decides to, I want to kind of get the ball rolling, or hey, I want to liquidate some. I want to, raise some cash. Liquidation doesn't necessarily mean it's all negative, right? And again, that's where a very narrow-minded thought process, with traders really, and that's what gets people, overly short, because they think that, oh, okay, we got long liquidation day, and okay, this is going to continue. Okay, the market's going to, hell in a handbasket type of thing. All right, we're going to short the hell out of it. That's not generally the case, right? The market is a rotational machine. Okay, really think about it that way. Yes, there are parts of the machine, such as the technologies, that are the most important, highly, that financials, etc. But it's just a wheel, and monies go from, sector to sector, okay, group to group. And so, if there's liquidation that occurs, all right, somebody's raising some monies to move in to buy something else, okay, over a period of time, right? So that sometimes you get these quick shocks, and sometimes they come out of nowhere, like, what caused that? All it takes is literally one person, one mutual fund decide to say, I want to sell 500 million of whatever, S&Ps, right? And they have a basket. The way all this is done is via baskets of stocks. And the market makers, i.e., the big market making firms of the world, right? Citadels and such, they take the opposite side of those. Okay, but when I say they take the opposite side, they're not just blanketly buying everything that a mutual fund wants to sell and buy it for their book. Okay, then that's not the case, right? They work on getting themselves, quote unquote, in shape, and that is the term that is used, right? When I was in the market making world, get in shape. Okay, in other words, the mutual fund does not want to bag the broker, okay, or the market maker. They don't, because they have to work with them, right? The market makers are the ones that provide quite a bit of liquidity to them on a daily basis. So they're not looking to jam you. If you think about it yourself, are you looking to jam your best friend? Lay off your stuff to your best friend? It's not usually going to be the case, right? You're going to say, hey, get in shape. Get in shape first. Try to find me some buyers. Whatever, or get in shape and then price me. They price blocks. Okay, you don't see the blocks. You used to be able to see blocks of trades. You don't see blocks like that anymore. Very rarely. They're all done in what are called dark pools. All right. But anyways, that's a different conversation. But the point is, right, you get these breaks, right? And then you typically get kind of a balancing, right? They bring it down to levels or push it up to levels, and then there's some sort of a balancing that goes on. They need to absorb, okay, you know, a liquidation break. So this is just how, you know, again, if you kind of enter the marketplace every day, just saying, look, the market's just a big rotational wheel moving around, right? Sometimes fast, sometimes slow. And and you know, so the wheel goes, you know, prices go down. Again, they reach areas, they got to consolidate, right? Wheel in the sky keeps on turning. Okay, so kind of think of it that way, right? So now what we want to do is we want to identify, okay, what's been the most recent range, right? What's been, you know, kind of framing it out as we always do. So there it is. This is a pretty nice looking D level delta profile, balancing profile, right? Where you got the high volume node and you got, right, lower edges. So now price is up here near the higher part of the profile. So again, this becomes, you know, breakout or fake out, right? BO or FO, breakout or fake out. Well, we'll see, right? So right now, price is above the midpoint of this range, so we can just kind of outline the midpoint of the range there. So price is above the midpoint. That's bullish, right? But look at this. We had this move up and then this move down and this move up. Okay, so if you were to like take this section out of it, not that we really need to, but if you did, right, the market's just still in basically a consolidating range, right? Yes, we have a little bit of an upside lean at the moment, and that's the way we're going to begin today, right? So on our short-term basis. An upward lean. We also know this is a DP. What's the DP stands for? Or DPZ, if you will, right? DP, decision point or decision point zone, right? So this area is a decision point, right? We're on the 95s. And by the way, that was one of the targets on the daily trade strategy if you read that coming into today. Okay, 74.95. So that's been fulfilled. So now the question then becomes, you know, right, what's to happen from this point? Should we get continuation or we get a reversion back to the mean, right, to the high point of control zone? We'll all find out that together, won't we? All right. So that's kind of where we stand at the moment. Again, not making any predictions and so forth. Pay attention to Nasdaq as well. Again, yes, they do. They're, you know, obviously highly correlated, but you know, I always take a look at Nasdaq as well. I pay attention to it. I don't trade it actively. Occasionally, I'll nibble with it, but for the most part, I'm not as good. I know my strengths and my weaknesses. I'm not as good in the Nasdaq as I am with the ES. You know, I have a better sense with ES because I've just been trading at such longer, you know. But it's funny because a lot of these screw tubers, you know, that's all that they trade is they trade the NQ, you know. So if you're good at it, it's terrific. It can be really fun to trade. All right, that's the skinny on the mini. Let's see what we can get accomplished here today. And again, if you have any questions, comments, all right, we had a good conversation yesterday. Yeah, good morning, world, everybody out there. Um, we had a good conversation yesterday about a few different things. So if you didn't get a chance to review yesterday's recap recording, again, I urge you to do so. Keep in mind, I'm only saving 5 days of recaps of recordings rather. 5 days. So be sure to review those. And I believe you can download them, but I think you need if I'm not mistaken, you may need a premium YouTube. I'm not sure about that 100%, but but you can still review them and take notes. All right, let's have a good session here. So starting the day off pretty much somewhat neutral. It is a positive 3-day cycle. So as a result, we typically refer to days like today, 3-day on the cycle day 3 as a wild card day. All right, just meaning that, the statistic has been fulfilled, targets in generally have been fulfilled. So it offers us, again, the market can, right, can move around. Free to move about the cabin is what I was trying to find. Right, free to move about the cabin. All right. So again, potential reversion back to the mean area. Also, if you take a look on the chart on the left, just some areas again should have all these levels on your charts, right? 3-day central pivot zone, right? That magenta area, right? You can see that 90s through 96s, right? Again, in many cases, once you have these, once you start really recognizing these areas more readily, okay. One of the challenges I like to put out there for everybody, if you're willing to accept it, try to write a little bit of a synopsis for the next day. Doesn't have to be, you know, as extensive as the ones I write for the daily trade strategy, right? But rather just kind of, just a simple, what would be a bull scenario? What would be a bear scenario? What level or zone would I choose for the line in the sand? Okay. Challenge yourself for that. And again, it's just help. It's kind of, and I do it the night before. So it's not like I'm doing it first thing in the morning and I see what happened overnight. I'm trying to curve fit something. I just do all this stuff at night before anything happens overnight, right? And I find by doing that and prepping at night, um, I've given myself a chance to step away from the active market, right? Then I come back later in the evening and I view what's happened, so a little bit more of an objective view. And then I say, okay, what are some of the key areas that the market traded through, at, around, and then I identify some sort of line in the sand and say, well, if it moves higher, where could it go? If it moves low, where could it go? That's simply the process. And I use all the various charts that we have, you know, identify, zones, 3-day central pivot zone like this over here, or, a prior opening or close or a high volume node. Again, we've talked about many of these things. So just challenge yourself, and that could help you prepare for the next day. Oh shoot, I didn't have this turned on. I'm sorry. I didn't have my ATRs turned on. I thought I turned these on. I guess I didn't. Sorry about that. I didn't have the ATRs turned on. Yeah, sorry about that. These are valid signals. They didn't trigger on the screen. I didn't have the ATA turned on. Sorry about that. Voodoo. Funny. 70 foot in your line in the sand at 60. Oh yeah, interesting. Yeah, Well, also remember, the line in the sand is plus or minus 5. So I do try to give myself a little bit of, you know, cushion back and forth. But yeah, it's kind of fun to see though that look at that right back to that line in the sand. Like he knew. How did he know? I don't. I don't know. Yeah. Oh yeah. You want to? Yeah, I got the voodoo doll here. Well, actually, I got the voodoo doll on the 3 day cycle. Oh wait a minute. No, do I have it? I don't know. I think I have the voodoo doll on a 3 day cycle. Oh yeah. I'll send it to you here. I'll send it to this. Anyways. All right. All right. So again, just stay with kind of the underlying moves, right? So you get a move down, you get a little bounce there. Guess what we have? We got a premium there, right? Had a premium right around the 73, 74s, right? So again, all those things are playable. Yeah, that's the only voodoo doll that I have. All right, so just hanging out on the, just kind of moving around, moving and grooving with the flow. All right, sell side flow, of course, when we get the shift. I mean, that's all really kind of guys when regardless of all the bigger picture stuff that I've spoken of, right? Kind of as backdrop stuff, right? Again, really, what we do intraday is just that. You know, market kind of shifts, you shift with it. Market wants to shift back up, shift with it. Look to get catch that first pullback. All right. I mean that is unfortunately the simple plan. Try not to complicate it, but there's always the doubt, right? I see it, but I don't believe it. It can't be happening, but it is. All right, so also keep one thing in mind as well. Again, as we're speaking about the cycle days, positive 3-day cycle is complete. And what does that call for? Although it's a potentially wild card type day that we that I've spoken of, the next cycle sequence is for a decline. Okay, the next cycle sequence is for a decline, and that decline is, what did I lose my pen? That cycle sequence is measured from the current high, or the cycle day 3 high. So right now the cycle day 3 high is 96 half. All right, so that's the current high. Don't know if it's going to be the final high, but we can make an assumption that it is obviously the high at the moment. So we're looking for a decline now. Projections for a cycle day 1 decline, average decline. Okay, I have them up here, right? 18s and then 7402s. Those are the average decline projections. I'm already giving it to you. All right, so that is the potential. Doesn't mean it will get there, but those are the potential. So what does that mean if it gets there? That means that the objective on a cycle day 1, or the average decline measured from the cycle day 3 high, would be fulfilled. All right, so I'm actually giving you that little bonus there for you today. That's part of the subscription, but again, giving you that little bonus today to take a look at it. All right, but again, the thought process today, all right, based upon cycle, is that we're looking for a high and then the next decline to begin. Does everybody follow along with that? So we talked about that yesterday, about not only seeing what has happened, but thinking about what may unfold. Right. So, and obviously it looks like today a break of that close, right, at 77s, and our 65 line in sand, right, started accelerating everything. Right. So we're staying to the short side, biased only. So early, I'm just going to make some notes here. Early fade against the CD3 high, followed by violation Oh, all right. I just wrote. Yeah, I just everything I just spoke of, I wrote out in text, so we could have, so we can have a. All right. So the early fade against the cycle day 3 high, followed by the violation of the 74.65 line in the sand, opens the trapdoor for the decline, which with lower projections measuring 74.18 down through 74.04, based on the cycle day 1 average declines. Okay. All right. Let me know if you have any questions about that. John says, John South, I had my horizontal dashed yellow line at 81 quarter. 81 quarter. Okay, cool. All right, 81 quarter. So what is he talking about? What the hell is he talking about? Let's see. Let's see what John's talking about. All right, take a look at that. Okay, so this is what John does. All right, John, if you don't mind, I'll take the. Uh, let's see. Let's go horizontal line. Okay, so color yellow with 7. Okay, so this is what John does. John is saying here, I had my horizontal dashed yellow line at 81 quarter pre 930 for a potential reversal BLT, right? Barbara Lopez trade. Barbara, I believe, is in the room today, right? The voodoo per the PTG library and Barbara. Okay. All right. So what is John doing here? All right. All right. So first, let's locate. Okay. Actually, let's just clean this up just a touch. Get rid of that for the moment. All right. And so what is John what is John referencing here? All right. He's referencing the pivot, right? The most recent pivot. That's this right here. Does everybody see that? Raise your hands. So John's referencing this pivot. Okay. Okay. So then what John does, he knows we're at the highs, right? These 95s area. So what John does, he takes his yellow line and he moves this. He goes like around here. This is what John does. John, you don't mind me saying that, right? I'm showing everybody the secret sauce. Right? So this is what John does. John puts a big yellow dashed line where a potential reversal, if it's going to unfold, right? The BLT trade, Barbara Lopez trade. So, right? So what he does here, he sees this, that already pivot's already there. He's looking for what? He's looking for a break of that pivot. Okay? And then from that point, John, you can explain what you do beyond that, whether or not you have a sell stop already in place, or if you take the first pullback, in this case, the premium. All right, so John, if you want to outline your next steps, that may be helpful for everybody. All right. So what John's demonstrating, what I'm putting up on the screen for everybody, is using what we have in our toolkit and utilizing Barbara Lopez trade, the BLT, to identify a level, if broken, if violated, right? Again, this would be a key high up here, right? The 94, 70, 74, 95s. So this is what he's doing. And then he's looking for that type of shift. All right. So instead of using the discount, which is typically a long, he's using the break, right? The break of the pivot, right, as a sell. And that's the Barbara Lopez trade. That's available to everybody on the website. Thank you, Barbara. And thank you, John. All right. Everybody's good with that? Could be something you want to put in your toolbox. Okay. So that's the outline. Could be something you certainly want to put in your toolbox. Great, great. Wink, wink, nod, nod. All right, we're at the D level now. Ooh, we got another liquidation break. All right, you got the D level here. Lower D level is in play. D level MB. All right, yeah, we got a little bounce off of the D level there. All right, certainly playable. But again, keep in mind the momentum still is down. All right, but again, D level is playable. DLMB is still playable. When I say momentum is still favors selling, I mean it doesn't mean selling down. We look for selling on bounces, right? So again, don't want to conflate, the two. The momentum still to the down, but we can get these bounces from the D level, right? Nice DLMB, guys. Boom, boom, boom. All right. Oh my God. How many times have we seen this happen, right? I can't make this stuff up. And Barbara caught the bull stacker. Barbara caught the BLT. What are you talking about? Right there. There's your BLT. There's your premium high. Very nice, guys. Well played. Well played. Remember, 10% to the big guy.
Yeah, 10%'s the big. I think this is one of our secret weapons, right? And again, you know where I learned this, right? Everybody knows where I learned this, right? It's back in the 1980s. The mystery fib. Yeah, there's. I think sailors having margin calls. Wow, what a reversal, eh? Huh? So what did we talk about this morning? The market is just big one wheel, right? One rotational wheel. It's just a line of code. All right. See, this is where everybody freaks out. This is where everybody freaks out, right? They get all like ruffle their feathers. Oh man, we're going to hell in a handbasket. Something must be happening. We got a short. Marge, we got to get out now, Marge. They're selling it. Sell, Mortimer. That must have been one huge PKB when Mortimer sold. Imagine the rally after Mortimer sold. This is the Mortimer counter rally. How many people got hosed on this, do you think? Oh, I got to sell the first bounce. I got to sell that first bounce after it bounces, right? I guess not. There's some dead bodies on the side of the street this morning. Side of the road. Roadkill. I'm just making some notes of what I just said. So the so the my assistant Allie can pick it up for the recap. All right. All right. So we're back to the mid. All right. Let price settle down a little bit here now. Yeah, let me show you this particular. This is from Ninja Trader, and again, this is kind of an older style that I've had, right? But if you take a look on this, this is the it's a 5-minute chart, and again, you all have this on Sierra chart as well. But look at this area right in here, all right? You see where they say HIST? Of course, that stands for history, all right? So history 4, history 3, history 5. POCs, points of control. So there's a monster cluster of high volume nodes going back 5 days. 5 days, 3 days, 4 days, all in this area. Then you got histogram 2, okay, and here's today's. So this is 2, 4, 3, and 5, and this is today, 1 or 0. All right, so look where price is. Look at again, all these lines in here. This is all POCs. All right, so you can see that there's a cluster. It's the cluster bomb of area. It's the cluster bomb area, right? So again, you have all that on your Sierra chart as well. That'll be on your 5-minute. All right, so again, cut right through there and bounce back up, and kind of like at the moment anyways, kind of sitting in this area here. Doesn't mean it's going to stay there. Just kind of reference points. That's all.
All right, so guys, let everything just settle down. Right, if you're out of trades now, all right, just let things settle down. Market's going to find its footing. All right, again, it was really out of balance. Well, Orist, I don't know what the lean is at this stage, truthfully, right? I mean, we've gotten that snap, that move in a snap. So Orist asks, can we say because it is cycle day three, that there is a lean to the downside? So again, as I kind of outlined earlier, one of the expectations would be, having that high in place and then a decline, okay, unfold. So again, there would be the lean to the downside, right? The initial kind of idea that is somewhat already run its course, okay, with this big snapback rally, right? So that's kind of run its course that way. So now it's I'm kind of neutral at this point, you know. We're in that big cluster of points of control that I just outlined. We got a 5-day point of control right in here, right, and then you get the day 4, day 3, all in that area as well. So big kind of a cluster area here. So I'm kind of at a neutral spot at this stage. Okay. And if you kind of just read the current intraday price action, look at where how the VWAP is set up, right? This over here on the right. So there's your VWAP, pretty well flat. There's no real angle to it. So now we're just kind of in around the VWAP. We're kind of oscillating around that area right now. Yeah, could it go lower? As the day unfolds again, certainly could, right? It could migrate higher too at this. Again, either way. So that's why I'm kind of a neutral uh, spot at the moment. That's a great question, though, right? A very good question. Again, now typically on a cycle day three, to kind of expand on that question, typically on a cycle day three, that's why I refer to a cycle day three when the targets or when the statistics been fulfilled as a wild card day. Not necessarily a wild day, but a wild card day, meaning that the market now has fulfilled kind of core objectives, and it can certainly go either way. Uh, Today it chose to aggressively go down and snap back up. I have no idea what the reason why. It could have been like I told you, as we briefed this morning. Could be just one person saying, GTFO, I want out. I want to sell $500 million worth of, SPOOs, right? S&P, right? And so no real demand for it at current prices, which were much higher, right? So what do they have? What do they need to do? I'm just going to need to smash it. Give them a price. You know, you guaranteed this price, and if we can do a better price for you, we'll adjust it better. This is what also happens sometimes, in terms of the market making world with these institutional players. All right. As an example, somebody comes in and says, "I want to sell $500 million, 500." Okay, the million is assumed, by the way, right? So I want to sell 500.
So the market makers will price them a guaranteed price on whatever that size is, right? 500. But if you can improve upon it in terms of the final price, and the broker, the market maker still makes, their monies, right? Their profitability factor, right? They'll do so, right? So just because just because a market maker guarantees a specific price, that is the guaranteed price. So if it goes against the market maker, he's guaranteed that price to the customer. But upon the guarantee, if the broker, meaning the market maker, can improve upon that price, the market maker gives them price improvement. All right, is everybody following with that? So, and that's a good thing, because what happens is that market maker, that mutual fund, perhaps that customer, is then going to give them a slew more of business, because they're operating in a very respectful and the type of manner that we're going to give you price improvement if we can. And from the standpoint of the customer's view, again, that's the institutional customer, not a retail customer. From an institutional customer, they remember that, and I can assure you they remember that. And then more business is going to come, more quote unquote layup business, right? Layup business, not the hard stuff, the easy stuff. Here, take this, just give me a price. You don't have to guarantee me a price. Here, just take this, give me a price. Which in a sense kind of implies, it's not written, but it implies, make some money on it, right? Cover yourself, make some money on it. And that's what they do. It's a back and forth, because when it comes time for them to need liquidity, the market makers will give them that liquidity required. But also, if there's price improvement that can be made, the market maker also offers the price improvement. So it's kind of a give and take, in that world. It's a world that we don't participate in, by the way. Retail, in the general trading, we don't participate in that at all. So it's a different environment. Let's take a look at my calendar. Hold on a second, Bob. Calendar. Oh yeah, Monday after. Yeah, that'll work. Write that down. All right. So now what do we do? Just gonna hang tight here in the middle for the time being. Yeah, observe, observation, orientation. Yeah, observation in all areas of life. Yeah. There it is. 74.65, Steve. Steve 9. Voodoo. Back to 74.65. It's voodoo. Who needs Mancini? Oh, did Manny's number 4 set up? What was his number 4? Support buy 73.98, 7400. Oh yeah, see that, Bruce. Oh, so if everybody has their ears on here in PTG, just let me make it's. I don't have an official announcement on this. Okay, things are still in the pipe working, but if it all plays out the way the powers that be want it to, okay, um, I will be returning back to the pit room on Wednesdays, and I will be simulcasting myself. Okay, everybody hear that? So if it all works well, uh, when we come back from the holiday, or July 1st, actually next Wednesday, I'll probably be simulcasting both rooms just on Wednesday mornings, and it's going to be my cell phone. All right, not going to be a confusion between talking to others back and forth, right? Which was a shit show. But I'm not sure 100%, but highly confident that that's the way it's going to be. Nothing against Manny at all. I think Manny does a great job. Right? And again, that's the general consensus, right? Manny does a fantastic job, but the interaction between what he's doing and what I'm doing, or what others are doing along with him, it's just really difficult. Because he has certain, he has his way, his approach, which is fantastic. I mean, I'm learning his clock. What he calls the execution clock, the market blueprint execution clock. I'm learning that myself, working on actually incorporating some of that into what we do overall. But again, he has his way. Everybody kind of has their style, right? And the whole premise of the pit room is an area where many people, many contributors can discuss what they're doing in a particular session. So like Danny has Danny, right? Danny with an I. Um, she has her 12 o'clock on Wednesdays, right? So it's her period exclusively, and so forth. And others, the original design was to have somebody on a Monday, Tuesday, Wednesday, Thursday in different time slots, and have their exclusive time slots. Uh, because of some things that unfolded that were unanticipated, okay, Manny had to pick up a lot of the slack, and he did. Like I said, he's done a fantastic job doing so. Right, so we're kind of reworking that in terms of the various scheduling and so forth. So something that again, I removed myself from that temporarily, and I did mention it's more likely temporarily, but we can move that. So this allows me to, if this all kind of works the way we want it to, I'll be back on a Wednesdays, and I'll be able to simulcast both rooms. So you could stay in this room here. Those that are in the pit room listening there, they'll hear exactly and see what exactly we're doing. But it's only going to be on Wednesdays, so it's not like we're giving up. And again, I'm very conscious, right, of what we do here. You know, um, I'm not. It's not designed to give away what we do, right? So I'm not going to give like the secret sauce of everything that we do here to people free in that room. It's more of a way of demonstrating some of the things that we do in our community, and if somebody from that community, because there's people coming in and out over there, but it is also offers an opportunity for us to demonstrate things that we do. And if somebody's interested more in Polaris and what we do as a group community, then the door is open for them to take a more significant trial perhaps, and then maybe join up. you know so that's kind of what it was designed for. And the same thing with other contributors out there. For those in the pit room, say, hey, I kind of like Rich, or I like Bo, or I like Manny for that matter, right? I like, and you know what, hey, I like what Danny's doing, Danny with an I. I like what she's doing. I'm going to join up, and get a deeper dive into what they do. So it was kind of always set up that way, but it was designed that way initially. Where we got to kind of a little bit got away from that because of certain factors that were unanticipated, and now we're kind of circling back to that format. So I'll let you know, um, if that's going to be the final look, but that's kind of what we're working back towards. So I just don't need extra work. I don't need extra confusion, and certainly you guys, you folks don't need it either, right? All right, so now we're in this kind of balancing phase. All right, right around that cluster of points of control, which I outlined earlier. Um, this would be a good time if anybody had any questions or comments, since we're right in the middle and we don't really have, any significant trades working at the moment. So if you have any questions, comments, this would be a good time to throw them out there, or forever hold your peace, as they say. So overall, I'm just going to still be, nibbling to the long side. I think at this stage, look at that. We're also look at it, right back to the scene of the crime. Scene of the crime. How can we determine absorption of buyers and or sellers? Well, it's really hard to do in terms of on like a 60-minute chart. Okay. You can use a 5-minute chart. Again, in terms of absorption or that type of thing, what we're really looking for is volume. It's not so much a candle bar. All right. So again, when it comes to absorption, okay, it's not a candle. It's not like a 5-minute candle or a tick bar candle. It's volume. Okay. So the candle kind of just, all right, down, 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 right, down, and then finally reaches, a level, okay, then we're starting to get kind of two-sided back and forth, right? That's kind of the first look, right? It has to reach a level, and then you need to get, in this case, buyers responding, right? And then it pushes up, and then sellers are still there on the bounce, right? And then as it goes lower again, buyers come back and they respond, right? So what happens is what you'll end up seeing is you'll end up seeing the volume begin to taper. All right, you see this, Horst? Right, so it begins to taper. Yeah, it's a taper. Okay, and so kind of you think about the forces here, right? So you go down, right, and then up, and a lot of times they're somewhat equal for a period, right, because of the reaction. Then you get another down, and then you get another up. and then another down, and then another up, right? And kind of oscillates kind of back and forth, right? So it's actually producing some sort of like, and you see the coiling effect, right? So I'm kind of just demonstrating a coiling effect, right? Versus, what the one, but you'll see here in a similar way, right? You'll see that it's coming to a peak. All right. So the same thing here, right? An apex, right? So it's kind of coming to an apex. So basically, what you're getting here, again, this is kind of an ideal look, but what you're basically doing is you're looking for each oscillation back down to get lesser and lesser of an impact. All right. So remember, what does it mean about the various lows, right? So like even over here yesterday, using yesterday's, right? So you got this move down and you got this move back up. You got another move down, you got another move up, right? You got another move down and you got a move up. Now look at the pattern there, right? It's not, and this is not ascending, right? This is descending right here, so there's still selling pressure. But if you look over here, right, what you're starting to see are what? Wicks, right? Buying tails. Yeah, I call them tails, right? Long tails. Yes, tails, right? Right. Same thing here, right? Pushes down, right? So what was the aggressive push? Then we got to move back up. Another move down, another move up, right? Another move down, another move up, right? So notice the absorption, right, is on the downs, right? They're getting less and less, or there's buying tails that are absorbing that. Okay, so you have to kind of absorb. In the case of the sellers looking for buyers, okay, the absorption of buyers, it kind of think about it as shock absorbers, right? Think about it as like shock absorbers. Shock absorbers, kind of start to dampen those oscillations until there's no more oscillations, right? So that's kind of, to me, that's the effect of whether it's absorption, right, in terms of buyers or sellers for that matter. It's kind of a shock absorbing effect. Okay, so that's kind of where you can kind of identify that, and you can identify that in bar structure. I did say you couldn't, but you can actually. I was thinking of something else, but also it's the same thing, with volume profile, right? So you're seeing kind of that move up, that move down, move up, move down. The volume is getting, right, less and less. And of course, until it reaches some sort of an apex, all right, and then at some point, that oscillation, right, that apex will be, peaked, and then the market's going to start, working its way. Now again, it could take several, you know, there's no specific time limit or structure necessarily, but there is some footprints or ID, volume and price to be able to recognize, right? So things like that. So that's kind of what I look for, and some people actually look at the actual volume numbers. I don't care about the volume numbers per se. I mean, they used to be much more meaningful to me in the past. I just don't think the actual numbers of bars matter as much, right? Yeah. Oscillations though matter, right? The oscillations matter. I mean, if the oscillation is up and the oscillation is down, the oscillation is up, oscillation is down. I mean, there's, it still has to work its way through, right, until it finally dissipates, right, and then there's no more pressure, right? Pressure could return, certainly, but again, we don't know that, but we don't observe that until it happens. But on the flip side, if the pressure is relieved, right, then you could get pressure back to the opposite side, which we saw. Oops, sorry about that. Which we saw today. All right. So kind of thinking about it is kind of a combination of potential um, bar long tails, right? You can see up here, there wasn't, right now there's no long tail in this area, right? And it's kind of reversing back down. So it doesn't have to be a long tail, but you do want to see kind of a stopping of volume, all right, associated with it. It's always going to be in terms of volume. That's kind of the primary determinant kind of that. Does PTG track single prints? I know where they are. I see them. I don't have any specific um, notation about them, but I certainly do track them in terms of, observation, right? So like if you take a look, uh, a lot of times singles can really help. They can actually identify, a point from which the market can reverse. Singles are just, there's not a lot of volume. Um, they can act as support resistance, rejection levels. So I would definitely look at singles that way as well. But I don't have anything specifically for singles. I mean, the market profile folks, perhaps would be a little bit more, uh, you know, in tune with singles. Um, Making sense here says I'm having a weird thing with NinjaTrader where it's missing 30 minutes of data. We loaded all historical data. Uh, you've you've shut it down and reloaded. Yeah, I don't know. Yeah, I don't know. Is it delayed data? Do you have delay? Is it delayed data or is it real time? It is real time. I'm not sure. Um, I'm not necessarily a Ninja fan. I need to use it, but I'm not really a Ninja fan. I'm a Sierra Chart fan through and through, but I'm not a big Ninja fan. I use it because I have to. What I really like about Ninja, if there's one single aspect of Ninja that I like, is I can do multi brokers. Okay, is I can do multi brokers on one platform. Sierra Chart doesn't provide for that. If Sierra Chart provided multi broker access like Ninja does, now I don't know if it's a trademark thing, but if Sierra Chart ever allowed multi broker access data feed just like Ninja, similar to Ninja, it would be the balls. Yeah, but I'm not 100% sure. John asked, I guess it's related to the single prints, right? I view them as the same as a low volume node. Yes, right. I was thinking the same thing. I didn't actually phrase it that way, but yes, that's another way of looking at it. The singles can act as a very good kind of rejection level. So low volume nodes typically. So think about low volume nodes as more rejection areas or zones versus high volume nodes. High volume nodes would be more viewed as acceptance areas, right? Again, that kind of makes sense. Trades, traders, that are trying to remember, think about this as merchandise as well. It's an auction, right? We kind of like, so a lot of times we forget a lot of these core things, but it's basically an auction. Well, you know, where are the highest, where's the highest activity of auctions? Where there's the most volume. Okay, most people want to, they view high volume nodes, peaks, right, as more fair pricing, where more people come together, right, to trade. So fairer price point, they can do more business, so higher volume, so acceptance, all that kind of flows through.
Whereas low volume nodes or single prints, right, can act as, rejection points because there's little response or, little volume. Nobody's really wants to trade there relative to other areas naturally. And so the price doesn't stay there as long, nor is there adequate volume in those areas. So as a result, prices move away from those areas. Single prints kind of would act similarly. They do trade there, they don't stay there long. Does that make sense? Thanks, John, for that. All right, John B. So just kind of expanding on that. So when price gets kind of dislocated, right? So like here, you got to push up in price. You can use a lot of different examples, right? Overall, but you get this push up in price. Now, yes, somebody wanted to buy them to push them up there, all right? But did it stay up there long? Where's the highest volume action? Is down in this area here, right? This whole cluster, right? So it didn't stay up there long. Somebody pushed it up there. There was probably an imbalance, a temporary imbalance of order flow, and somebody wanted to buy something. So what do they have to do? They gotta keep bidding it until they find what they want to buy. I don't care if it's new long buying or it's short covering buying. It doesn't matter what the reason of buying is. Somebody wants to buy it, so they push it up. Again, they're going to push it up until they find enough supply to fill whatever they're buying, and that could be an initial buyer and then everybody jumping on board. That's has to buy. Maybe they're forced to buy, and then you got those saying, "Oh, look, it's starting to move. I'm going to go join up on that." Right? So again, the collective move unfolds, but it's going to move until all those buyers get filled. And then if there's no follow through buyers, again, that's the thing. You get the initial buyers, you get everybody that kind of jumping on the bandwagon, right? And they're moving it. And all those people that are active doing that, they finally reach an area where sellers are absorbing them, right? Talk about absorption. They're absorbing the buyers, and those buyers got filled. Now, in the cluster of those buyers, what type of buyers do you have? Well, you had that one that initially needed to buy them for whatever reason. It's typically going to be an institutional player. And you don't know if they're, hey, I just need to buy them to cover an option sale or, and again, remember, it's not necessarily, oh, they know something more than I do. It's just that they have an order they have to fulfill. This is kind of the thing. When I was a market maker, I never thought that somebody knew something more than I did, and like, oh, they must know, they must have the inside baseball, look. Not at all. They just have an order. They got to buy them for whatever reason. They got to buy them. We don't know those reasons, and nor did we ever care for what the reasons were. They just need. All we know is they needed to buy them.
and they willing to buy them up to a certain point to fulfill their strategy, to fill their whatever they had to do, right? And then of course you get the other ones starting to see that move, and what do? They jump on board. And then you got those that are short, let's just say, and now they're seeing somebody's out there starting to buy it, and they say, "Oh shit, I got to buy them now too. I don't really want to, but I got to buy them. Otherwise, I don't know how far this is going to go." So they're there quickly trying to cut their, exposure. So then it moves to the point where somebody out there is, sitting to sell them. And then when that's done, look what happens. Comes right back down. So who do you have? You get the guy, you get the buyer that was initiated it. He's done. He got his fulfillment. You got the shorts that had to buy. They're out because they had to cover. And then you have those aggressive buyers that were trying to view that as a breakout. And now what are they looking to do? They were looking to sell them higher. But now guess what? They're trapped. And then and they're not real strong buyers. They're just going along for the ride, right? And the music stopped, and then it reversed. So they're trapped, and what do? Now they have to blow out, and it's just rotation back and forth. So when you start looking at this stuff and thinking about it that way, yeah, I'd like to buy them down near VWAP, or I'd like to sell them up near, a particular area. I also look at where the volume is activity in that area, in those areas, right down here, right at various points. I'm looking at, hey, there's acceptance over here around the 40-41s. There's resistance up here around, or potential resistance around 70-75s or 65s, and those type of things. So that's why when I look at volume profile, right, I'm looking at where those kind of the peaks, are, and when the troughs are, the low volume nodes, high volume nodes, and that kind of gives us an insight of, yes, past tense, but again, those are where traders are positioned, right? This is where they responded from up here at 75s, one of our targets today. Most moves, if you had to categorize them, most moves stop and reverse. Most moves stop and reverse. So if you kind of view it from a standpoint of just the market is oscillating, between levels, and what you want to be is you want to be, let me use the word agnostic. Okay, maybe that will be the password next month. Agnostic. You want to be agnostic about price direction. In other words, I don't care where it's going. I just view it as, you know, here to there and back again. All right, we're coming up to our 2 hour mark for the day. We're going to cut it off at the 2 hour mark here, about 11:15. All right. Again, just stay flexible with whatever the market is showing us. Again, with this type of day, we can certainly traverse the entire range again. All right. I mean, this is essentially what we've done. We I kind of categorize this as a range runner type day. So kind of just note that here. It's not a cycle name. It's just. I mean, again, I don't know when range runners are going to occur, right? But you can clearly see down, up, and already we're rotating again. So this just tells us there's a lot of imbalance or indecision in terms of agreement on price. There's a wide spectrum, and so it creates this type of. We usually get kind of range runner days a couple times a month, anyways. Could be more, but generally, lately with volatility, it could be a little bit more than that. But generally, you usually get them at least a couple times, and you never know when they're going to happen. I'd have to go back and take a look at if there's a specific cycle day that they generate on. That would be kind of a research project if you wanted to do something like that. Right. But all right. If no more questions, we'll cut the stream off here, and we'll reconvene tomorrow for Capital Preservation Friday. Have a good rest of your day, and stay flexible.